in conversation with Neeraj Kanwar, the Vice Chairman and MD of Apollo Tyres. Thank you very much for talking to us on Moneycontrol at the World Economic Forum. Neeraj, you have a ringside view to the economy because of the business you're in, tires, trucks, the offtake, the business offtake. Tell us a little about what you're seeing in terms of business sentiment.
Well, in quarter three in India, I'll break it up into India and Europe. India, we were pretty bullish, but when it actually came to the demand cycle was pretty negative. We only saw very small growths in truck and passenger car. Farm as a category is down. So Q3 has not been that optimistic and bullish. On the other hand, Europe, we are seeing some positive pathways made in cars. So OEMs in Europe are up 7%, which is also a matter of EVs playing up a big thing in Europe. So EV vehicles are also increasing by nearly 10%. So Europe, on the other hand, is slightly going up. I'm not comparing it to 2019, but at least from last year, they are up 7% in cars. So as far as Q4 is concerned, I see now India becoming more optimistic than Q3. I believe that in Q4, Apollo will see better results and we will see better growth targets coming out from trucks and from cars.
Right. The fact that you're optimistic about Q4, what are you basing it on? Is it, consumption going up, people spending? What is it based on?
Well, I think the demand cycle is coming back. Interest rates are still high, but I think people have been a bit cautious in quarter three. After Diwali, they have been very cautious. So now I see some of the demand coming back up. Consumer buying pattern is also increasing, and therefore trucks will start moving. Consumers will start purchasing vehicles and cars. So we are seeing that already. Signs from the OEMs that we deal with, all of them, Tatas, Leylands, already the signs of productions are higher than Q3.
Right. In terms of the commodity prices, Neeraj, it's been largely stable. So, can we expect price hikes, or it's largely going to be stable?
No, I think it's going to be stable, both on the oil side and natural rubber, which are the two main components for us. I think they have eased out. They're going to be stable. Yes, there is a big concern on supply chain, given the Red Sea issues that we are facing currently. But again, I think that's a short-term thing. I think governments will try and resolve that as soon as possible. But yes, supply chain continues to be a big concern all over the world. And freight rates have gone up by nearly 40% because of this issue. Transit time taking is more than 15 extra days added on to the shipments. So that's a big challenge that we are facing right now. So on the raw material side, on the commodity side, things are okay.
Right. I think the last time we spoke, you spoke about a greenfield plant in Andhra. Right now, TN, of course, is a big, place for you in terms of manufacturing. So take us through your investment plans. And, you also had a target that 45% would be exports in the next couple of years. So where are we on that? The making in India for the world?
Yeah, so for us, Make in India is very, very critical. Andhra plant did come up in March of 2020 during COVID, or May of 2020. We're doing very good over there. We're running at 75-80% capacity. Tamil Nadu, as you know, Chennai has our largest plant in India, and so that's also running at 75-80%. So yes, there is a very clear focus on exports into Europe and into the US. That will continue. That journey will keep continuing. As far as CapEx is going, for the next 2 years, the idea is really to consolidate internally, because we've put up 3 big plants in the past 10 years, one in Hungary, one in Andhra, and the Chennai plant. And so right now is to really sweat the assets of the organization to try and improve our balance sheet ratios. That's very, very important. So our ROCE, which used to be below 10, is now around 15, 16, and we want to increase that further. So really sweating the assets. The clear focus has been on digitalization, and this is something that I need to mention here. Why we are going capex light is because through artificial intelligence, machine learning, we've got 2 innovation hubs with data scientists sitting, one in London, one in Hyderabad, where we are analyzing machines. We are analyzing all the 7 plants and all the equipments that are given. All the data is now real time in the cloud, so we can see real time data of what's happening in our plants. thereby analyzing that data and trying to see how we can increase productivity with minimal capex. So already signs of that. It's been a 2-year, 3-year journey which we began. Already in like Hungary plant, we've already increased our mixing capacity where the rubber is mixed by 10 to 12% with minimal capex. So these are the things where Apollo will start investing in, a lot in digitalization to try and see how we can improve our productivity in all our plants and and continue to put more money behind digitalization. That is one of the critical things that we have learned through the past 2 to 3 years. I guess the pandemic also made us realize that we have to go digital, and we have gone in all respect, and people have also started seeing the benefits in the tire plants. Now we are taking AI into the customer centricity, trying to understand customer behavior. That's another thing that we are looking at. Then comes to the supply chain. So forecasting accuracy becomes very important, and through AI, you'll get demand accuracy and then production planning accuracy. Right now, what happens is there is inventory that gets built up because of non-accuracy of demand. And so artificial intelligence will start teaching us on buying pattern of the consumer and trying to see how we can become much more efficient as far as supply chain is concerned. So that also has a effect on carbon emissions because you're not using so many more trucks to transport your tires to various dealers and keeping inventory. So you become much more efficient in managing logistics and thereby reducing carbon emission. So all of this is integrated. So for me, digitalization, sustainability, becoming carbon neutral, our target of becoming carbon neutral is by 2050. Our first target is that by next year, we should be 30%, all our factories should be on renewable energy. And so these are the things that we are doing in our own way to try and see how we can get the carbon emissions down, because industry and especially mobility is nearly 30 to 40% contributes to the carbon emissions in the world.
Right. I also wanted to get your thoughts, Neeraj, on how you see the whole transition to EVs benefiting Apollo. How you planning for it? How you investing for it?
So EV tires is nothing, I would say, new. R&D has been working towards this. So an EV tire really needs the requirements of an EV tire are really zero noise, because now it's a battery and not an engine. Secondly, we need much more torque. And third is rolling resistance. Okay, so these three aspects have been, R&D has been working on it for the past 4 to 5 years. So there's nothing new to bring in, but we have launched EV tires in Europe and in India. And we are seeing a surge in EV tires coming around. So small investments, nothing major, because this has been ongoing for a very long time.
For two-wheelers?
In India, yeah, for even passenger car. Right. And in Europe, obviously, for passenger car.
Right. Finally, Neeraj, just wanted to get a sense from you, when you talk to global CEOs, Indian CEOs, what are you picking up on whether they are optimistic, pessimistic, bullish, bearish?
I think currently we are getting into a very challenging year politically. There are 40 countries that are going.
50% of the world's population
yes.
will be voting.
So 40 countries are going to go for voting. We already have 2 wars going on. There is uncertainty, definitely. There is no clear sign of any green light under the tunnel. But I guess one has to move very cautiously, spend very cautiously. Cash is going to be the king. And you just have to toe the line very, very cautiously. But as a company, we are very optimistic. We believe in, we see that demand will come up, and we're just gearing ourselves for that.
Right. On that note, thank you very much for talking to us, Neeraj.